I would say there are very few times in history, in my lifetime or in anyone investing lifetime, where you can buy something that is that severely depressed based upon historical averages going all the way back, whether it be ratios between gold and silver or just, logic would dictate selling at these prices compared to where it was in 1980. I can't think of too many things that you can buy at a 40% discount to its 1980 price that has expanded massively in its uses. Things are breaking. And I think you could argue if you have gold, this is the time to trade it to silver. You don't get opportunities like this very often.
Gold continues to assert its dominance as the preferred safe haven asset, widening the gap between itself and silver. After establishing strong support around the $3,000 level earlier this month, gold launched into a powerful rally, briefly touching resistance at $3,500 overnight. Although prices have eased slightly from that high, gold remains exceptionally elevated, last trading at $3,314.16 per ounce with a 1% gain on the day and nearly 32% growth for the year, an indication of sustained investor confidence amid global uncertainty. In contrast, silver has struggled to match this performance. Despite a modest uptick, with spot prices last at $33.58 per ounce and up just 0.29% on the day, silver has been unable to hold ground above the $34 level firmly. This discrepancy has reignited focus on the gold-to-silver ratio, which has now exceeded 100 to 1, a threshold reached only a few times in the past 150 years. Historically, this ratio has been a key signal for investors, often marking a point where silver begins to outperform gold dramatically. Market expert Andy Schectman states that the current extreme spread signals an impending shift. He notes that silver traditionally lags behind gold during the early phases of a bull market, only to surge past it once momentum builds. Historical patterns show that whenever the ratio approaches or surpasses 80 to 1, it tends to correct sharply, and with it now well past 100 to 1, many seasoned investors believe silver is positioned for a powerful revaluation. Schectman emphasizes that the ongoing accumulation of silver by countries like Russia, China, and India, along with escalating industrial demand and tightening supply, marks a critical inflection point for the metal. Silver's unique position as a monetary asset and industrial necessity has made it increasingly attractive amid global economic uncertainty. Meanwhile, logistical strains on settlement systems, such as the LBMA, and signs of unwinding short positions underscore the pressure building beneath the surface. According to Schectman, the confluence of these structural forces could lead to one of the most significant upward moves for silver in modern times, offering a rare opportunity for those who understand the deeper mechanics at play. Now, we present the clips from Schectman's interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you, and enjoy the video.
It does have that historical catch-up pattern where it continuously lags behind gold in as gold makes its bull move, but then typically will dramatically catch up and outperform gold on a percentage basis. Anytime you get near 80 to 1, Ivan, it's a sell signal for gold and a buy signal for silver or an exchange. You go back 5,000 years and the ratio geologically was 16 to 1 for almost all of humanity. And now it's 7 to 1, as Keith Neumeyer will tell you. It's depleting in nature.
Right.
It's found in like your skin is epidermis. It's found in nature in a form called epithermal, right near the surface. Big deposits have been exploited years ago. And so if you have a 16 to 1 geologic ratio for most of human history that has now fallen to 7 to 1 because it is the easy stuff has been scooped up. The price average has been 40-ish to 1 for the last 200 years, largely because of gold's role as money and silver in an industrial capacity. That's man's ratio. God's ratio said 16 to 1, falling to 7 to 1. Man's ratio for the last 200 years has averaged about 42 to 1.
Right.
And now it's 100 plus to 1. This is an opportunity you do not see but 1 or 2 times in an investing career. Look, I'm taking my gold salesman glasses off, and man to man, I would tell you that it's the opportunity of a generation. It truly is. And when you see the amount of concentrated short positions that seem to be unwinding in both London and in COMEX, the United States, because being naked short when there's this kind of global demand coming out of China, who's flying all around the world buying up doré and concentrate, in particular Peru and Latin America, paying double what the West will, sending it back to China for refining as the second largest producer of silver in the world. And
Right.
India buying north of 850, 900 million ounces over the last 4 or 5 years, and Russia adding it to their strategic stockpile. I don't ever remember a country doing that. And massive deliveries coming into the US, and the LBMA going from T+1 settlement to T+8 weeks because there's a shortage of trucks.
Wow.
Shit's breaking everywhere and
Right.
things are happening everywhere, Ivan. And these distortions that you see only magnify the final outcome. But anytime in history you go back, you're anywhere near 80 to 1, let alone 100 to 1, you're near that reversal, that catch up that you speak of. And I would say there are very few times in history, in my lifetime or in anyone investing lifetime, where you can buy something that is that severely depressed based upon historical averages going all the way back, whether it be ratios between gold and silver or just, logic would dictate that selling at these prices compared to where it was in 1980. I can't think of too many things that you can buy at a 40% discount to its 1980 price that has expanded massively in its uses. Things are breaking. And I think you could argue if you have gold, this is the time to trade it to silver. You don't get opportunities like this very often.
Gold has seen an unprecedented surge over the last 60 days, with prices skyrocketing from $2,900 to nearly $3,400 per ounce, a movement Andy attributes to much more than a simple market rally. The United States has become a net importer of gold since November, a shift that has driven massive inflows into COMEX. Central bank demand, which has been fueling the rise in gold prices for several years, has reached a new level. This is particularly noticeable with the upcoming Basel III regulations and discussions surrounding the potential issuance of 50-year treasuries backed by gold. According to Andy, these factors suggest that gold is being quietly reintegrated into the global monetary system, a sentiment echoed by various geopolitical moves and financial strategies, including Trump's recent post highlighting the significance of gold in international negotiations. Despite gold reaching new record highs, the mainstream media has largely ignored its rise, which Andy finds remarkable. He recounts a recent observation on CNBC, where gold's price was shown just once among several other indices, despite its record-setting performance. This lack of attention in the media and a near-complete absence of retail investment in gold signals that the public remains largely unaware of the unfolding changes. Central banks and institutional players are quietly positioning themselves ahead of what Andy believes is an inevitable shift in the global financial system. With gold draining from physical reserves, like the LBMA, and discrepancies between paper contracts and actual bullion increasing, Andy sees these quiet movements as part of a larger strategy by the world's biggest players, laying the groundwork for a future where gold could play a pivotal role once again in the global economy.
There's no coincidence. I mean, we become a net importer of gold. The inflows into this country have been off the charts, net importers since November, as we talked about. And the central bank demand has for several years now been what has been pushing the price higher, but something's different here in the United States, no question about it. And it's interesting with all of the gold that's flown into COMEX, with the U.S. becoming net importer, with the July deadline for Basel III regulations coming into play. All of these things are interesting with, an interview I did with Judy Shelton where she's talking about issuing 50-year treasuries backed by gold. All of this stuff, Scott Bessent, the Treasury Secretary, when he was running a hedge fund, his largest holding was gold. All of this stuff we keep hearing. And then yesterday, we get a tweet from Trump on Truth Social saying, the golden rule of negotiating and success, he who has the gold makes the rules. Thank you. He wrote that on April 20th, yesterday at 3:09 p.m. I think that's a little interesting. What we are seeing right now, to me, more than anything, Ivan, is is gold being reintegrated somehow, some way into the monetary system? Whether we look at the massive amount of gold that's been accumulated by the BRICS nations and the admission of their, at least in principle, according to Dilma Rousseff, the former president of Brazil and the head of the New Development Bank, that they've agreed in principle to a gold settlement currency called the unit, 40% gold-backed, deliverable to central banks on demand. Whether we see the draining of the LBMA to levels that no one's ever seen before, and a massive discrepancy between paper contracts and gold bars available, or whether we see all the stuff coming here in the United States, something's going on, and it's not like gold is reacting to an event. Instead, it just is quietly I believe, being reintegrated into the monetary system, because not only is the public asleep, Ivan, when you first burst onto the scene, everyone was talking about silver, and now no one can't hear it. No one's talking about gold. Nobody.
Yeah.
And that's the crazy thing. If you would have told me gold would be at 34.40, and you don't hear or see a damn thing about it anywhere mainstream, hardly at all.
It's crazy.
Yeah, and so that to me tells me that's still very early. It's the central banks that are doing this. It's the big money who's pushing it, but very quietly. I was at the club the other day working out, and at the end of my workout, I always do the elliptical, and normally I'm looking out over a window, but that one was taken, so I'm in front of a big TV, and it's CNBC, and I never watch it. And they got the streaming ticker that goes by, but underneath it there are boxes that spin every 4, 5, 6 seconds, like the Dow, the Nasdaq, the S&P, the Nikkei, the 10-year treasury yield, all that stuff. And I see gold come up. This was a few days ago when gold was 32.50 or so at its all-time high at that time. And I notice, well, something's weird here. I'm paying attention, and then comes gold again, and I count, and it's 47 spins of the boxes, maybe close to 10 minutes before it shows up again, at all-time highs. And I'm counting at the same time. There's 3 boxes that all spin with different indices, and I'm counting at the same time Bitcoin. There are 9 references to Bitcoin in the same 47 spins of that box to the one of gold at all-time highs.
That makes no sense.
Well, it's just either that or it does make sense, one or the other, and I can't quite tell. But if you would have told me at any point in my career that gold would be completely ignored by the mainstream as it's making new highs almost every day, I would say that's just impossible, but it's true. Wow. And so the investing, the retail public has virtually no allocation. Rick Rule just told me the other day, again, 0.5% allocation from Joe and Jane Sixpack to the Harvard Endowment Fund. There's virtually no mainstream retail investment. This is all the biggest money in the world who knows the playbook and is positioning ahead of the realization by the public. But these are strange times, man, completely and totally strange. But yeah, I think something is vastly different with gold. It has strength that I've never seen before. It gets knocked down by $200 a few weeks ago, and here it is way back up again, now at all-time highs in the aftermarket here again, up $10 after being up close to 100 or more earlier today.
Wow.
34.40 basically is where we're at. So yeah, crazy time.
Despite silver struggling to keep up with gold's impressive gains, there is still optimism surrounding the precious metal's potential. Analysts suggest that silver could reach $40 an ounce by the end of the year, driven by factors that remain supportive of its long-term growth. While concerns about a potential recession have dampened silver's industrial demand, roughly half of its global consumption, the growing green energy transition provides a resilient demand base for silver. Its critical role in renewable energy technologies is expected to remain strong, even during economic slowdowns. Moreover, silver is set to experience another supply deficit in 2025, marking the 5th consecutive year of such shortfalls. As gold's rally continues to draw attention, silver, often seen as the more affordable alternative, could see an uptick in demand, making it a compelling option for investors seeking opportunities in the precious metals market. That's it for today. Share your thoughts on Andy's analysis in the comment section below. If you find this video informative, don't forget to support and turn on notifications to stay informed about our latest videos. See you in the next video. Thanks for watching.